Hey, what's up, everyone? Welcome to another Ask Me Anything happy hour with the BYOB Money Mentor team. We are on red alert this week. We are all flying into Orlando, Florida for the PMC Money Tank live event. We do them twice a year, although in 2026, we might only do one. So pay attention because it's going to be a big one. We're going to make those decisions very soon. But today we're on to answer your questions. Get your questions in the Q&A around infinite banking, becoming your own banker, real estate, investing, private lending, or any other financial topics you want to get into today. We're here for you. So we'll be right back. We'll do a quick little around the horn, and we'll get to answering all those questions. All right, be right back. All right. Well, I did put on my Facebook page, I'm looking for Audible books that people recommend. So if anybody's got a Audible book they recommend, put it in the chat box. I'd appreciate it. I got 7 credits I need to spend, and looking for recommendations. Other than that, like I mentioned, just getting ready to drive up to Orlando in the morning for Money Tank. Got a lot of people flying in from all over the country. Even South America. We got the South America connection going to be there. So got people from all over the world coming to Orlando. I'm going to see a lot of you guys there, and really looking forward to it. So get your questions in the comment section. We'll start answering those, but I'll start out with Mr. Brian Fouts out there in Idaho or wherever you live.
North Idaho. Yep. Yeah, it's actually cold, wet, and rainy right now. So getting ready for winter here, getting all that stuff going on. Kids are sick, home from school right now, so that's not very much fun, getting all those germs from school. But yeah, so I'm just doing a lot of policy illustrations right now. I had a lot of unique cases, and even have some cases out in Puerto Rico, so kind of cool. But yeah, having a lot of fun. And I'll be missing everybody who's down in Florida because it'll be warm. So with that, go over to I'll go down the test.
Hi, I'm Tess. I am Michigan, and it's not warm here anymore, but that's okay. I will be in Orlando, leaving in the morning. And I told you, Stephen, earlier, I actually asked ChatGPT if it knew who you were, and then I had it recommend books. And I think there's about 21 of them. So you'll have to tell me if any of them are of interest to you.
Yeah, that's awesome.
Now it's over to Linus.
Craig.
There we go.
Make sure you're not going to be last. Craig, you go next.
Yeah,
wow, I feel so special because my whole life, the name starts with Y, I've been at the end of the line. So this is awesome. Craig it's just where I live is horrible. Nobody should ever be here. The weather's horrible. The scenery's horrible. Colorado. Iowa, Nebraska, Kansas would be a much better pick. But anyway, I just feel I have to do my part here. Yeah, just we had a good wealth webinar, just more of kind of a, observer and slide flipper today. But Chris went over the Kyle Busch IUL, which was an awesome session. And it's always good to hear about all the different things that you need to be cautious of on IUL. So that was a great session. So if you didn't get a chance to see that, it'll be up on Chris's YouTube channel on Saturday afternoon. Now we're going to go right back up to Linus.
Hey everyone, Linus Nolt here from Hopkinsville, Kentucky. Actually celebrating my birthday today. Last year ahead of me before I turned 30. So that's what's going on today. Going to actually have some special plans for tomorrow. Go out with Verna. Have some special time for my birthday tomorrow. Today, helping a wide variety of people advance towards getting their first policies for infinite banking. So having fun with that. Beautiful day today here in Western Kentucky. Whoa, what's up, Joe?
What's up, Linus? I finally got in here. So trying to get ready gonna go out to dinner tonight with Katina because it's her birthday. So happy birthday, Linus. And everybody get your questions in so we can start answering some.
That's right. To Craig's point, Florida is closed as well. There's nobody allowed to move here any longer. If you're in New York City and you're thinking about it, sorry, border's shut. Ron DeSantis said, sorry, maybe next time.
Well, Stephen, I see that they're moving the Statue of Liberty down to Florida.
Oh, wow.
From what I see, the Statue of Liberty's been crying a lot lately.
Oh, man. All right. You guys better get some questions in before this goes off the rails real quick.
So Shauna, introduce yourself and tell us something about yourself today.
Oh, one, I'm looking at myself in the reflection here, and I need to go to Florida because I'm looking extra pale. So maybe
I'm not the only one. I thought it was the light.
I know. I feel like I'm my specialist here. No, but excited to go to Florida. Not excited about a 5:30 a.m. flight, but is what it is. So
5:30. It's 5 a.m. Shauna. Boarding time is 5 a.m.
Yeah. So that'll be a nice night. But that's about it. And then I do think we do have one question in the chat. Unless Chris, you got anything you want to drop in real quick?
No, I think we just rock and roll. I did enough talking in Wealth Webinar.
All right. And Jim is saying, what is the difference between the policies you offer and max funded IULs? Sorry if you already covered it.
We don't offer IULs. That's one thing. So we for infinite banking, whole life, dividend paying, specialty design policies is what we focus on with mutual insurance companies. So that's what we do. Now there's lots of differences beyond that.
I mean, I hate to say it, Jim, you really, really need to just kind of open the internet up and just type in Kyle Busch. That's the first thing you need to do. And I think once you read a little bit about what's going on with Kyle, what's going on with Pac Life, maybe watch the Wealth Webinar we just did, maybe watch some of Chris Kirkpatrick's videos on YouTube, some of my IUL videos. I don't think you'll be asking that question after you just do a little, not even a deep dive, but just a surface level sniff about IULs. And that's pretty much all I need to say. We didn't so much cover it. We really, really deep dived that on the Wealth Webinar. But yeah, I mean, the differences are far and wide, and it really just comes down to what you're trying to accomplish. But I think it's also more important that you understand the risks that come along with IULs, which are definitely in the public spotlight right now due to the over $8 million loss that Kyle Busch, the famous NASCAR driver, is dealing with right now in the lawsuit against Pac Life and the agent for the IUL that they bought that was missold and misrepresented. Check that out, and then we'll circle back next week on that question.
I want to add a couple of things from my point of view, which I'm not a licensed agent, so I don't even sell the regular whole life ones, let alone the IULs. But this is just something that I've learned, and it's more from from what I have heard and what I have gathered is that the IULs are really highly incentivized. So that's one of the major differences that I've learned about is that they're very incentivized to sell as opposed to the ones that we are selling. So that's a major difference there. And then another difference in our policies versus their policies is if you started a policy with us, correct me if I'm wrong, but you can cancel it in the first, you can cancel it essentially. And I feel like with the IULs, you can't cancel it. That's something that I've noticed.
Yeah, surrender fees.
Surrender fees, yeah. I mean, the one thing is like when you fund a true infinite banking policy like we design, you can get your cash value back out if you have to for some reason. With IULs, that might not be the case. And then one of the last things I'll mention is guarantees.
Yeah.
Guaranteed death benefit, tax-free, sounds pretty good. Well, go and Google IULs and guaranteed death benefit and see what comes up. So
I want to bring up if IULs were so good, how come banks aren't using them? Why do they use whole life and not IULs?
To that point, Joe, if IULs were so great, all of us could do whatever the hell we wanted. If IULs were so great, we could and would sell them, but we don't. Nothing stopping us besides our own selves.
I don't know. It depends what you're gonna see and believe, because I've been seeing agents online saying that banks do use IUL, and somebody that's just not
talking about the videos Doug puts out there.
No. It was somebody a lot less experienced than that.
All I can say is they're wrong, and
Right.
it doesn't take much research to find that out. Sometimes I just can't believe sometimes that people don't just do a little bit of due diligence. I'm not saying go deep dive, like pull out the textbooks, go to school. I mean, just like a Google search, like that would do it. That would do it.
All right, Craig Parsons is saying, can you point online of your videos that are good as an intro to someone in their 20s, or a book to point to?
Sure. I'm in my 20s. I was 24 when I learned the concept. And I'll tell you that I started with a book called Mapping Out the Millionaire Mystery by Chris Naugle and Brent Kessler. Easy read for a young guy like me that doesn't like to read books. And then I moved to Chris Naugle's YouTube channel from there. So I can tell you that. As far as a specific video, I'm not sure that I can necessarily point to one specific video. Maybe someone else can.
I think Chris put one in the chat right there too that you should be able to click on.
Yeah, those are the one book is so good, and then the other one I'm reading right now, it's really good, the AI book.
All right. And then Shane's asking for more videos as well. Which couple short videos do you recommend to send to family that's close to the tipping point to explore IBC and PMC? Short being the key because they have squirrel tendencies.
Squirrel.
Depends on what short is. I mean, to me, short is like 30 minutes, but if they're
Yeah,
not a 5-minute video, that's really short. But it depends on Shane. Like, what's their goal? Like, if they're looking infinite banking for like debt, we have a 3-part series that Chris did on debt. It's really good. I like this one right here. How do you submit a question? Well, the same way you submitted that question.
You did it, Michelle. Do it
Good
again.
job, Michelle.
Do it again.
Type it in and send it. There you go.
Do it again. Oh yeah, so Shane, I'll put the links in for the 3-part series that I give to people that's on debt.
No, they're clear of debt. He's looking for something that's
Oh.
not debt.
I'd have to go look then.
Here's one, and actually this kind of fits the last question too. It was how infinite banking concepts works throughout life stages. So like how it grows with you. I'll throw that one in the chat. And then there's another one that's saving money won't make you wealthy. Here's what will, and that is about PMC. And they're both about 25 minutes, which Brian liked. I think that's short as well.
Sounds like somebody has a vacuum cleaner going.
Yeah, I'm sorry, that's me here. Let me mute.
Oh.
Yeah. I
Do we see any questions? Oh, here's one. Christian Amara saying, why would you want to cancel it if the power of the policy is untouchable? When I mentioned that our policies can be canceled as a difference.
Oh my gosh. Stupidity is the only thing that comes to my mind, but people are swayed very easily. I've had a whole bunch of just amazing policies get replaced by IULs over the last couple of years, and I have literally gone in and mathematically showed them that like this isn't going to work the way you want. And the one guy was like, "Well, my brother's got this, and he says his did this and that, and I don't know. I feel like I'm just not making the money I'm supposed to be making." I'm like, "You're making every penny that was shown on your illustration. I don't even know what you're talking about." But anyway, yeah, can I just opt out for stupidity? Here's your sign.
I mean, I would say I've had a acquaintance of mine who canceled one, but he had a catastrophic life event, and he actually, because of it, he had some mental issues, and so I mean, he went from $10 million a year to like nothing, and so he had a massive catastrophic event. IRS came on after him pretty hard, so he had to use he couldn't even fund the policy anymore, high premiums. So there something like that could potentially be a reason. But at the same time, I've had people that have had huge policies and stuff, and they have a catastrophic event, but guess what saved them? It was the policy that saved them, because they're able to, have liquid assets or access to liquidity when they needed it. And so the policy actually saved them. So it's just, there's lots of different ways, reasons, but
And Brian, for that, it becomes super important to focus on capitalizing your system to have a liquidity pool available for emergencies like that.
Yep.
So it does take some.
Brian, Shauna wouldn't be here if it wasn't for the policy. Like, I've told that story. I got a YouTube video on it. I mean, literally, like, she walked in my office back years ago with her paycheck, and she had control. Like, she looked at the bank accounts. That's one of her roles. And she said, should I be looking for another job? And I'm like, what do you mean? And she's like, well, I got my paycheck and I checked the bank balance and there's not enough money to clear my check. Should I be looking for another job? And I kind of was taken back. I'm like, well, hold on, just give me a couple minutes. So I went in, took a loan, structured a note, and then all was good.
Yeah, there you go. And actually, I mean, I don't tell this story very often. I have before, but Chris, you probably know Patrick Donahoe. Who he is. So he had 3 partners in his business. So he was an infinite banking guy. I know him. And his partners left the business and actually had done some things behind the scenes that really was going to destroy the business. They had done some financial things that were very bad for the business and then left him holding the bag, so to speak. And the business was basically negative. And he used infinite banking to basically save his business, which, by the way, taught infinite banking, did infinite banking, which is kind of cool. And then now they're very they're big and they do a lot of financial services, but he used infinite banking to actually save his business. So yeah, kind of cool.
That is super awesome. Matt Ziegler saying, good evening, everyone. New here, just getting started with my plan. Question. So setting up my second bank account for my IBC, how would I make a payment for my policy or loan payment if the government puts a hold on bank and locks them down?
That's a good, interesting question.
Did the government put a hold on anyone's accounts?
I have not experienced it.
I guess if you live in New York City, you might want to consider that. But
get a different bank. That's what I would say.
They have the power to put such holds on bank.
Oh, they certainly do, but they have to have a reason to do it. They can't just lock your bank account down. I mean, fraud and if somehow you're doing things illegally, they can lock your bank account. But yeah, I mean, I suppose if your segregated account got locked, you probably did something really bad or are accused of doing something bad. And I don't know. I don't really know what you would do at that point. I mean, you'd just probably have to open a new bank account, like you said.
I can tell you if you get onto the wrong type of money laundering list at the federal government, basically anything you try to do in the financial system will be locked down. And in some cases, the insurance company is even required to cancel your policy and send all your money back. Mm-hmm. So there is a level of you do the crime and get some consequences. So I guess there is that to keep in mind. But just say a bank arbitrarily closing your account or putting a hold on it or you putting a hold on it, all that's really doing is blocking the transaction. Maybe you can send them a check directly. There's other options.
Yeah. And also, I mean, you can go back and look at the history. I mean, I don't think it's happened before that I'm aware of.
1933 bank holiday.
Oh yeah, the Great Depression. Mm-hmm. But keep in mind, I mean, even like someone said to me the other day, "Well, Brian, can I just use a check? Because if my bank account, if something happens to the banks, can I use a check?" Well, everything goes through a bank. That's the challenge here. The only way to really get around that is to actually make banking actually available to the public. Meaning, you can anybody can open up a bank. Right now, you can't do that. So, what's the book that talks about that? Is it The Case for IBC? I think it talks about that. Yeah, how you can take the banking system and actually make it not privatized, but it's the opposite of that, public. So it's kind of a cool strategy, but I don't think I'm going to see that happen in my lifetime.
I got to read that again.
Yeah.
Well, what you will see in your lifetime is the ability to tokenize your cash value into stable coins that are all compliant with the Genius Act, and then use that. But I would assume that would all fall under the same banking rules.
In that case, I mean, could you have your policy if they could deposit into like a brokerage for crypto? That'd be interesting.
Stay tuned.
Yeah.
Yeah.
Yeah, and he was just asking, if the U.S. takes a downward turn, more so.
I mean, yeah, you got to consider that the U.S. dollar has collapsed 3 times in history, and the insurance companies were still profitable during those times. So I mean, yeah. So there's been a lot of bad things that have happened.
If that happens, we got a lot more things to worry about than our cash value. I'm just saying. I mean,
what's the question we always get? Well, what would happen if the insurance company goes under? There's something else going on in the world that is probably going to be more concerning than the policy. I mean, like a mushroom cloud somewhere. I mean,
it's so true. Oh,
yeah.
I like mushrooms.
Not the ones that make your hair glow, or make me grow hair. That'd be bad too.
all right. Michelle is submitting her question. She's saying, how do we do our due diligence to determine if an investment is safe to get into, and how can we verify or vet the deals?
Well, there's that amazing program called Accelerator that's taught through this group. I would highly recommend that. Noah Harris.
Orlando, baby, Money Tank. Let's go. That's why we're going to Orlando.
I mean, I always, that's what PMC Wealth was set up for. I mean, a financial advisor that understands alternative investments and understands real estate investments and how to do due diligence. So maybe, talk to one of the advisors over at PMC Wealth. They can give you investment advice on different things that you're looking at. I mean, that's kind of always been the way. If you don't know what to invest in or the risks with an investment, most people, they get a financial advisor. The problem is most financial advisors just want to move your money into their account so they can manage your assets in regular stocks, bonds, mutual funds. But what PMC Wealth does is alternative investment management, and not so much management, but advice and fiduciary advice at that. So they're only going to advise based on your needs and goals because they're bound by them. So that would be a good start. You can book a call by going to pmcwealthadvisors.com. We'll put it in the chat.
Yep. And then probably the way Tess and I have learned how to determine if investments are safe to get into is definitely education first, which is webinars, trainings like this online, like what Stephen's saying, going to an event. It definitely takes time to learn these things. And then, as Chris was saying, there are people who have the skills that you can employ to do those things for you. Carly is saying, I have a Manulife all-in-one in Canada with 28,000 owing 145,000 outstanding. How do you decide to chunk down the all-in-one or start investing with it in my IBC account? Trying to figure out the flow of money with all-in-one and policies. So
would the vault work for that, Craig?
So I was thinking about that. I mean, we may have to do some manual manipulations to get our policy in there because we don't support Manulife, but it would certainly help with the math on the all-in-one and the policies. Yep.
Joe, what's your take on that?
I don't know the numbers. So
280,000 balance on the all-in-one with 145K available and 30K in cash value policies.
Inside the policy. So when I do ours, like Lafayette say it has a borrow rate of 7, it has a dividend of 5.5. That's 1.5 inside of the policy. That's the net. What is the interest rate on the HELOC or on the borrowed money that you have? If that's at 7 or 8, the money that comes back into the house wants to go to the liability of that 7 or 8 before it goes to the 1.5. That's just mathematical. So when the money goes back to the HELOC, you want to fill up that HELOC first and then move into the policy if you're not moving that money. So until you get enough money out, making you what you want to make in cash flow per month, I would suggest keep paying the higher interest rate of the HELOC until you don't want to move your money anymore, fill that up, and then move to pay the cash value. The cash value and the dividends are going to have a little negative in the beginning, but the amount of money that you're making in leverage and arbitrage is definitely going to upset that number. So it'll always keep you at a positive.
Yeah, and there's so many other factors too with your income, your expenses that are coming in and out of the HELOC and how you want your money flowing. But the other part of your question is, should you use some of that for investing? And, you know, from my perspective, if you go after the debt, then that's kind of a guaranteed thing that you're going to accomplish. If you put the money into an investment, no problem, but you've added one element of risk. So you just need to be able to manage that and make sure that risk is still going to be acceptable for you. Then you run that income back into your all-in-one. So there's more numbers to be had.
At the end of the day, cash flow is the king. So the amount of cash flow that comes in per month minus what your debts are per month, you want that to obviously be the positive. When there's leftover and you make so much in interest in a month, now you're not spending any principal. Now all your principal is just going back into the pot. Now you're living on interest and keeping all of your principal. That is kind of the end game play.
That's the principle of the principle.
True. Is that PAL or PLE?
I don't know. There's that, and then there's that guy in school that used to pull you around by, you know, when you get in trouble. So I don't know.
All right. Shane is saying, I have my 3-year anniversary for my first policy. Do I send the interest and the policy at the same time for an annual premium? I did this policy as a annual one pay. I have some cash value, but it would not cover the interest because the funds are out on a loan at the moment.
So if this is Lafayette, Shane, I just did this today.
It's at One America, I believe.
Oh, is it? Oh, well, then
But he can do the same thing. He can do the same thing.
Can he?
Yeah, it operates differently, but yeah. Now, what I would say, Shane, is that the policy loan interest can be rolled into the loan balance you already have.
Oh,
but he does say this one is Lafayette.
Okay.
Right?
So you're going to get the little screen in the middle, and you're going to click on premium. It's going to have a grayed area that says the amount. So then you go into loan, and you click that, and then you can put in whatever you want. So whatever the loan payment is, $997, I just put in 1,000. So I paid back for the loan, and then I click submit, and then on the next page it showed me that I paid my premium, and I put 1,000 back in for the loan repayment, and that's what they're going to take the interest out of. So it was really cool and easy today. First time I ever did that. Last year I sent it in with a check and actually paid the interest with a check. So I like it better this way.
Interesting. All right. Knights of Israel saying, when does a good policy setup cash value exceed the total PUAs and base you put in typically?
Lots of different factors that will determine that. Age, gender, premiums, dump-in. There's so many factors. We'd have to run the numbers for you, man. But, yeah.
It can be anywhere from year 3 to year 18, just depending on the setup and what the plan is set up to accomplish. There's all kinds of factors.
Or year 2 with a dump.
He's talking about the cash value exceeding the total premiums paid for the life of the policy, I believe. So cumulative break-even.
Cash value.
Total cash value equals more than what you put into the
cumulative. So
Cumulative
cumulatively,
premium.
yeah.
Okay, somewhere between 8 and like 16, kind of what Lena said, I would believe.
Earliest I've done it is year 4. No. Yeah, year 4 or 5.
Year 4.
That's the earliest. That's rare. But yeah, then typically it's year 7 to year 8 or 9, and then different factors can be above that.
So if you're doing a huge dump and backing that up and getting a money tree in year 2, that's when it can come cumulative in year 4 or 5, depending on your age.
And all of this is like on the illustration. So if somebody calls in and is making a plan with you guys, they can find out when all of this is day one with you, correct?
I go over every number. I go over every year. I see where it goes, a money tree on cash. And then I say cumulatively, here it is, cash on cash. And then I'll usually go to year 11. And that's usually between 200 to 300%. So depending on what the values are, but I go over every line.
Yep. And if you have a vault account, the vault does all that for you with in terms of showing cash on cash, cumulative, when your dividend pays your could pay your premium, all that cool stuff.
Yep. So, but those things are upfront with anybody, before you sign on the dotted line. If you already have a policy and you maybe forget where that stuff is, because my policy is like 6 years old, so I don't necessarily know. I haven't looked at that piece of paper in a while, so I don't really know where it is. So it is there and very transparent to find. If you need help with that, we are here for that. Craig is saying, my 57-year-old friend has a New York Life policy with a $60,000 benefit and about $22,000 cash value. The policy pays for itself. Should she add to this policy or just start a new one? It's about 30 years old.
There's a good chance she can't add to it anymore at this point, but she could look into it.
I feel like that's probably a good step one, is to ask if you can, and then find out definitively if you can or you can't. And if you can't, then the answer would be starting a new one.
Yeah, and I would have them do an in-force illustration and just try to max out the premiums. So just ask them for in-force with maximum premiums, and then they'll know what they can put in to keep it from becoming a modified endowment contract.
Yeah, and Craig, he says, can't she still make the premium payments? It depends on what the option was that chose to have the policy self-fund itself, because there are some choices that you cannot reverse. And then there are some that you can reverse and go back to paying premiums again. So it just depends on what option you chose.
Yeah, and it could be a policy that's paid up and they don't allow any more premiums. So there's a lot of different situations. I mean, if we have the original illustration or an in-force, we could take a look at it and just see kind of what's cooking with it.
All right. Justin is saying, I got a letter from Lafayette after paying my premium and my interest. At the bottom, it says deposit funds after paying the premium at $34. So what does that mean? I paid it in full. So I don't know what that means or what they're talking about.
Too much premium.
Go ahead.
Yeah, because this just happened to me when I paid my premiums in October on one of my policies. I paid it early, so it went into the premium deposit fund, which I'm fine with. Then when they pulled, I put a little bit too much in for what they could actually put in premiums. So I have like 69 cents left in my premium deposit account. So the premium deposit fund is just kind of like a side fund that, like almost like a savings account that you can store money up before it pays your premiums. So I'm suspecting, Justin, that you probably just have some leftover dollars sitting in that premium deposit fund.
Yeah.
They'll use that and allocate that to your premium next year.
What happens in that premium deposit fund is you put it in and then it earns interest on a daily basis. So that number goes up every day. If you paid it a month early, it may have earned that $34 or most of it just in interest from sitting there waiting. That's what happened to mine. So you may get...
he must have put a lot in there to get $34 a day of interest. Because I think that it's like a 1%. It's like a 1% account.
No, I think it's 5% or 4%. Because when I put mine in, I couldn't believe I had, 10 grand sitting in there, and it was building up dollar after dollar. I couldn't believe how much extra was sitting in there after it was pulled out. It built up faster than I expected.
Yeah, so he can just use that for premium next year. I don't think they allow you to take it back. So I think
they don't.
Once it's in there, it's in there.
If you have room in LPUA, you could have them move it into the LPUA premium for you so that the premium deposit fund is empty once again.
Or if you have loans, you could throw it at the loans.
Yeah.
I might have to go back in and throw a couple more thousand.
All right, Joe. Christian saying, Joe, the napkin and nickel and pennies help me visualize how real estate truly works. Thanks. What does that mean?
So we had a meetup. He was driving through to Oswego, and he was on the 90, and I said, well, pull off on Miles Strip, and I'll come and pick you up at the McKinley Mall. And we went over. It was Monday night, so we went over to Danny's and had some 10-cent chicken wings and had a beer and dropped him back off at his truck, and he picked up his load in the morning. He had a pickup over on Route 5.
Nice.
But what was the nickel and penny? What was your?
Those were just diagrams that I was utilizing to show different things, and I had a nickel and a penny, and I just kept on moving them around and doing examples, kind of thing.
Love it.
Yeah.
My own whiteboard on the bar.
Love it.
Where'd you guys go?
Over to Danny's.
Oh, I haven't been there in so long.
Mondays is 10-cent wings.
I was gonna say that's crazy, dude. They're like they cost $1 regularly.
Did you go by Abbey Rose?
No, he didn't go over there. That's only you.
All right, that's my spot, man. That's reserved for me. Okay. Okay, I like it.
You guys are funny. All right, Dexter's saying premium deposit fund. Does One America have that too? Can it be used like a savings account?
I think
rather store it there.
I think that if you kept sending it, they'd eventually start sending it back to you without ever depositing it.
No, One America has a premium deposit account, PDA.
Do they?
It's not really an option that you can check on the payment form, but if you're making a payment over the phone, you could tell them to put it into the PDA, easy. And then whenever your next premium is due, you could call in and have them pull it from your PDA instead of you paying it.
You think they'd let him use it like a savings account though? And if he was, say he made an annual policy and he started sending it every month, don't you think they would eventually say stop?
No, the PDA and the PDF at Lafayette Life, they're allowed to hold, I believe it's up to 3 years of premium, no more than that, but
Okay.
3 or 4 years of premium is the maximum. So there's plenty of room. You can't use it like a savings account because you can't pull the money back for yourself.
Yes.
Unless the entire policy got canceled.
I used to actually do that, Tess. I would make premium. I would pay my monthly because everything's on annual, but I would make monthly, or every once in a while, I'd put some money in that PDA just to cover my premiums for the year. But I was thinking about an earlier question. I can't remember who asked it, but they said, "What if the banks hold your money?" Well, guess what? The PDA is a really cool place to store your money because the insurance company will take it for premium. So that might be the way to go.
Yeah.
The thing, if I remember right, that the money in the PDA or the PDF cannot be used to pay something like loan principal or loan interest. Only be used to pay premiums, I believe.
Could be.
You might need to make a call to your specific carrier to clarify that if it applies to you, but I believe it's only for paying premiums.
Yeah, and like Dex, saying it's just you can just put the money in there. Its purpose is for premiums, and then you don't have. It's almost keeping yourself from your premiums. So
yeah, I think he even learned the hard way that if you keep sending them money, asking them to apply it to premiums, they will apply it to premiums and make it a MEC, and then tell you afterwards, do you want to unmec it before it's too late? And so you got to be paying attention to your mail in that case.
Yeah.
Yes.
That's right. I forgot that was Dexter.
Craig is, we're back to that New York Life policy we were talking about before, where 60,000 benefit and 22 cash value New York Life policy that's 30 years old. He said, so it appears she can still pay the premiums, but what do we need to know to see if it's the best use of the money?
Enforce illustration.
Yeah.
Because you've got to see if you can put in PUAs with that premium.
just ask them when they build that in-force illustration to max out premiums to the, basically to the MEC line.
Yeah, because the concern would be is that, if the PUA writer is gone. So.
And then Christian saying, what's the One America interest rate on PUA?
PDA.
Or PDA, sorry.
Yeah, 3.25 is their guaranteed interest rate plus dividend.
No, he's asking about the premium fund, the premium deposit account.
Oh, sorry.
Do they have?
I'm looking it up right now if I can find it fast enough.
That's cool.
Hopefully it's better than 0.5.
Oh, it definitely is.
Yes, I've actually talked to clients that are doing like the an annual premium, and then they're saving up a month into a savings account, and I've given them a heads up. Hey, you can actually save that into the actual insurance company and earn interest on that money.
That's awesome. I'm learning.
Whoa, really? Yeah.
Yes, and it's a guaranteed interest rate. I'm just looking for the rate for the specific company he asked for.
Yeah, so it can be a good option, and it's also out of sight, out of mind, unlike a savings account. So
I might do that.
it actually private. So other thing too is like in a savings account, of course, it's public; they can see it. Inside this one, I don't think that any other financial institution can see this account.
Yeah, it's considered part of your policy, even though it's not technically inside your policy.
Yeah. So
Mass Mutual have one of these things too.
I just Googled it. It does. It says Mass Mutual has a premium deposit account
Wow.
where funds for whole life insurance policies are held in a separate account and earn interest. I got to do that. All right. Let's all do that, everybody. Let's all do that. Make sure we make these premiums.
Yes.
What's the last question for now?
I cannot find the rate on that right off the bat. It's an easy call to the insurance carrier to find out.
Let me see if I can Google it. While we wait for
I
questions.
believe it is a. I told you it's a guaranteed rate. I might be wrong on some of these.
But Joe, on the whole thought with all-in-one, we keep all of our money in the one pot system because, typically you're going to pay a little higher interest rate. So we want to buy that down. So for the all-in-one people out there, we tend to keep our money in the all-in-one until it's ready for premiums.
Right.
And then even so, if you had money in the PDA, wouldn't it be more beneficial to pay back the loan rather than just leave it in there to make 4% instead of paying the 6 or 7% too? So
and then take it out in premium if you needed it. Not that we want to do that, but
yeah. Instead of if you're doing $1,000 a month and putting into the PDA only getting 4%, why wouldn't you run it back in for $1,000 a month to save that 7%? And then when your annual comes, just take the 12% as a loan, put it back towards the premium, and then start it over again.
money goes from one pocket to the other.
Yeah.
It's all mathematical.
All right. Rob is saying, does anyone know what the contractual guaranteed interest rate is with Lafayette? I called them and asked, but the person said that there is no guaranteed rate.
No.
It's right in your policy contract. It's 2%.
It's not a guaranteed interest rate. It's called something else, like a guaranteed non-forfeiture rate.
Non-forfeiture rate, yeah.
That's what it is.
Basically, all it's saying is, like like Lafayette Life just increased their dividends. So they just announced the new dividends. They're at 5.9. 5.9%. Okay, so they did that. That's called the dividend crediting rate. And then the dividend crediting rate is backstopped with a guaranteed non-forfeiture rate, which is 2% with Lafayette. So essentially what that's saying is they're going to give you 5.9, but you can't get anything less than 2%.
So, just for the sake of argument, that's okay. They can say there is no guaranteed rate because we don't want the guarantee. We want the dividend anyway, which is 5.9.
Yeah, but I think people like that word guarantee, and I throw that word around a lot in my videos. Guaranteed, because it is. It is legitimately guaranteed. Lafayette went on to say that the dividend rate is 5.75, but that has to include guaranteed rate, doesn't? Yeah. So dividend crediting rate always includes the guaranteed interest rate, which is the non-forfeiture rate.
Mm-hmm.
Which Google says it's actually 2.75, but maybe it is, maybe it isn't.
There's different products that actually have different rates.
Okay.
Yeah, Patriot, which is mostly what we do, is 2, and I think even Contender and Sentinel are all at 2.
Okay, and you guys got that already? this Lafayette went on to say the dividend rate was 5.75, but that has to include the guaranteed rate.
Yeah.
True.
Yep.
True.
Is that Jay
Okay.
laughing, or-
No more questions?
Yeah, what is that?
I think cleaning is going
Looks like
on.
there's a little cleaning in Chris's office going on.
Yeah.
I said, was that Jay?
Vacuuming.
Oh no, Jason, is that you?
I thought I didn't think
No
it was
question.
long enough to be Jason.
No more questions? Are we done? What? Nobody wants to ask no more questions?
I'm going to say one thing on the PDA and the PDF. I think I told you wrong. It's not a guaranteed rate. That is going to be set by the company, so it is going to fluctuate. There's probably a minimum like 0.25. For certain, it's a lot higher than that. I think I would see where it's at 4 for Lafayette's PDF. More recently was, but yeah, give the carrier a call to find out.
Steven's having some fun up there too. Check out his face.
All right, ready for Orlando.
Oh, are you? Oh, are you? Be ready.
I'm not even packed yet, but
I'm not packed either.
I'm not ready.
And
what
Christian,
is Jay doing? Good job, Jay.
It's not Jay.
Jay.
Got a couple of rings packed up for you guys.
Whoa.
Where'd you get that? What's that?
Steven.
I'm packing, man. I'm packing.
so
Who are you
Christian,
giving that to?
yeah, go ahead.
Is that your new ring?
Pure silver, baby. Pure silver.
You didn't buy that from 7K, did you?
Not that one.
Yo, Steven and Joe.
Yes.
What's the
Yes.
plan? What's your guys' plan? Where's the after party at Money Tank?
We'll figure it out.
Okay.
Steven's gonna stay with me.
I know, Christian. It's a problem, man.
Dude, I've been falling asleep at night. You guys know me. I'm asleep by 9 o'clock. So.
Irish goodbye.
That's what you always do.
You know.
The
Me and,
ghost
Kevin,
story.
me and Kevin are at the bar. We're looking around for Steven. Oh, I guess he's gone.
All right.
Well, I will see you guys
Linus,
in Orlando.
wait, hold on a second.
Oh.
I did. I went in the contract with Lafayette because Linus asked some good questions. The minimum credit rate for the premium deposit fund writer is 0.25%. And you can have up to 2 times your annual premium. So there you have it. Use your PD. Use your premium deposit fund today.
There you go.
Maybe we should all get T-shirts that say, "Have you funded your premium deposit fund today?"
I mean, really, that's like an extra special banker if you've got your stuff like preloaded and ready to go, in my opinion.
Yeah.
Well, so I'll send you a gift. How about this? I'll send you a T-shirt if you fund your premium deposit fund.
For myself, the PDF and the PDA doesn't exactly make sense for me because then it's sitting in there where I can't access it, until it goes into the policy as premium. So I guess the way my cash flow works, it doesn't really make sense to utilize that, but it could for a lot of people. Rob is in there asking, Rob J is asking, does SML have a premium deposit fund of some sort? I couldn't tell you that for sure. I think probably they do, but I would say, hey, make that call them to find out.
I love SML actually, Rob. I have a policy with them too. I think they're great. So, but I don't know the answer to that.
Christian,
oh, go ahead.
Christian was in there saying, what did he say? The cleaning lady missed the spot on the emblem. I was thinking exactly the opposite because I'm looking at the emblem and there's an eye missing. I think she cleaned so much that eye is gone.
Well, she was cleaning so well, Chris disappeared. I thought she just vacuumed him up.
All right. Aviana is saying, do you have to have term insurance if you do a lump sum, or how do lump sums work?
It depends.
Pretty much.
Yeah.
Pretty much. I mean, I don't.
If you overfund a policy with a dump, that is going to need, for the most part, extra death benefit. And in order to get extra death benefit cheaply, it's already included inside the policy as term to get you more, so we don't mech the policy.
Yeah.
And then the only case where you don't have to do it is typically with some companies where, like One America, if you're young and doing a policy and not doing a huge jump in, they might not require term insurance. So it's all based upon death benefit and what you need to allow that dump in to occur without meching.
Yeah. What time? What? Oh.
Well, for I was saying I wanted a pickup truck for Sean and Steven to ride in. That one of the money tanks in Salt Lake City a few years ago, which was the last time I rode in the bed of a truck. But that's always really fun. Is riding down the road in the back of a pickup truck. But at this money tank, there is we're close to Universal, so there is these like waterways, and there's these free like water taxis, which are always a fun time to take you to and from certain places.
What time do you guys get in?
I'm in Florida at 8:30 in the morning tomorrow.
Oh,
I think 11:30-ish for me. How about you, Joe?
3:30.
I think I'm about 11:30 too.
Well, Tess, let's connect up. We can grab a ride.
Okay.
Shoot me your details.
Okay. Yeah, I think it's 11:30.
Rob is saying SML is good, but their website is very limited. That I feel like their website is from the 90s. It is straight up yes, no, pay. It's like a couple of buttons.
Yeah, that's actually pretty standard. That level of web technology is pretty standard across all the good carriers for IBC. They think super long term, so they don't make fast moves. So they're always going to be a little further behind on, at least on client facing technology.
I will say though, with SML, Rob, I don't know if you've noticed this, but as I pay my premium annually or no quarterly, and it'll say pay. It's like, which is really nice, is it'll say pay minimum, pay amount due, or pay maximum. And so I feel like they make that part really easy. Where I know some of you guys have to ask, what you can overfund, and SML makes it pretty easy. Christian's asking who's flying Delta. I'm flying Southwest.
Southwest.
Yeah, Southwest.
Wow. Southwest is carrying us all.
Yep.
They make it getting to Orlando easy, apparently.
I do have a stopover in Midway.
Yeah.
Oh.
Christian, at least you're not flying out of Louisville on UPS.
What?
Jeez, Linus.
Did you fly on UPS?
Yeah, did you see the big plane crash UPS had in Louisville last night?
That was horrible.
No.
Yeah, lost the whole plane.
That's awful.
Yeah, it was a cargo plane. No dangerous cargo, no hazardous cargo, to my understanding. But sounds like everybody perished, and some people on the ground did too. That it just sliced right into some factories and parking lots and stuff. There's a flight headed from Louisville to Hawaii.
I saw a video once, and I tried to forget it, but it was a cargo plane or something, and it must have been loaded weird, and it went like.
Wow.
All right, Shane's saying, do you have plans to renew the MSTV Morning Zoom? I do not know the answer to that. So not at this time. Yeah, not at this time, but it's a good question.
Although I guess you can watch the reruns.
And then Brian, one of your clients, is saying, what's up and good talking to you.
Oh, yeah. Awesome. Yeah. Has quite a few calls today.
Rob, I have SML and I don't know how, but I can pay my premium online.
The thing is with Security Mutual, I believe the maximum premium payment you can make online is 5,000 or 10,000. So that might be the difference there.
They're amazing servicing team though too. Like we took a meeting with the SML servicing team and they are there to help. All right, I think that's a wrap. We'll see a lot of you guys tomorrow. I know Felix, you're almost there.
Safe travels, everybody. We'll see you when we get there.
Yep, you too. See you tomorrow.
Bye-bye.
See you.
Have fun. Bye.